So, welcome. The most exciting trend vertical of this conference, B2B SaaS. It's the most majestic and secret and unknown vertical, I guess, and you're all wondering, so why these old people here on this panel are investing in B2B SaaS, not AI, not other interesting words here. So why B2B SaaS for you guys?
Well, you've really set us up with a winner there, haven't you? Would you like us to start with quick intros, or?
Yes.
Yes, sure. So
first B2B SaaS, and then the intros. So first, it's very important personally to know how you chose that, and then you will know what other people are here sitting.
Cool.
So
I'm a firm believer that you don't want to invest just in the sexy areas. I spent my whole career investing in what broadly other people might view to be quite unsexy. But as someone who sits with very much a growth hat, I'm interested in businesses where it's like almost the sleeper hits. So we're interested in businesses where we see real longevity. So I really do think I have a lot of peers, particularly on the earlier stage, who might be kind of more inclined to chase the sexier deals where you get the quicker markups, the quicker write-ups. But I think really historically, when you look at what does deliver DPI for funds, B2B SaaS is a much surer bet.
Yeah, for me, it's funny, looking back when I was at school, everyone thought about the sort of Uber and Spotify, and they described them as like, oh, it's an app. And if anyone was starting a startup, they'd be like, oh, what's your app? And then it sort of moved while I was at university to people starting software companies and B2B software, and everyone kind of thought, oh, that's sort of a bit new, and it was kind of seen as a bit different, and now it's extremely pedestrian. But yeah, I mean, I completely agree. It's sometimes the unsexy and the boring stuff is good, and that's where all the money's made. Sometimes I think there's a good overlap with SaaS and a lot of the other stuff that is a bit more exciting. So a lot of the AI is being deployed within the SaaS vertical. And yeah, I think there's still a huge amount left to do in SaaS.
Yeah, I think B2B SaaS is still the place to be. That's where we're seeing most fundraisers still. It's very much at the center of the action. And I agree with you, Theo. I think every B2B SaaS company needs to have an AI story today as well. So it's not black and white, it's interlinked.
So we all believe in this. And we can start also from that side. Back on the super quick intro on what you guys do, which stage you are at, and the verticals maybe focused area on to understand the variety of people on this stage.
Yeah, sure. So I'm an investor at 8roads. 8roads is a global VC. We were founded in the US about 50 years ago. We now have operations here in Europe and also Asia. It's quite a big platform globally. We manage just over $10 billion now in venture capital. We have a little bit more than 400 investments. And our focus is predominantly investing at the what we call the scale-up stage, loosely defined as companies who are post-product market fit. So typically Series A, Bs, and Cs. And I lead our new investments here in the Nordics.
Cool. Hi, I'm Theo. I'm an investor at Nauta Capital. We've done 3 investments in Finland, and it was only after our second one that we realized what Nauta means in Finnish. So for anyone that doesn't speak the language, apparently it just means cow. And yeah, so we have nothing to do with cows or anything like that. We invest in any B2B software, so marketplaces, fintech, but also B2B SaaS. We focus at the seed and Series A stage. We're very hands-on, quite high conviction, and within that we can do lots of different stuff. I focus mainly on fintech and enterprise SaaS, and yeah, that's us.
Great, thank you. So I think I can round out the spectrum from seed, Series A to growth. So in a prior life, I used to invest at the same point as Martin at Series A, but I'm now with Catterton. We are the world's leading consumer investor. That is a claim which no one has fact-checked, so please do tell me if you disagree. We manage 35 billion AUM, so it's a very sizable platform. I have colleagues who are managing all the way from buyouts, large majority deals. Where I sit in the growth equity fund, we are investing $1 billion all the way from Series B through to pre-IPO, so writing checks of 15 to 100 million. The way that we think about consumer is really the whole spectrum of consumer spend. So I'm not just looking at the kind of classic D2C, kind of more social media style investments. We're really looking at all the areas of core consumer spend, and then we're investing in companies which enable the consumer ecosystem. So I'm investing all the way from D2C, B2B, and B2B2C. Recent investments have all been in the States, but some very exciting deals, which I'm hoping to talk about later. So I will pause there.
And back from the growth stage, I'm here as well to add to the variety, because we invest in pre-seed, and as early as possible, we just hope that they have revenue, and they were like, yay, that's exciting, and then maybe they will go to the IPO at some point. So that's the whole variety of opinions that we have here. And maybe there were a few people here on listening to the previous panel, and I would like to actually pick a little bit of our brain back from that. So we started from AI today's conference, and would love to pick your ideas and to see how do you see the AI affecting B2B SaaS as well, and if you see any difference within your experience, within your firms on the investment decisions, maybe some risks within the portfolio company, maybe some benefits for portfolio company. So how do you see AI impacting the SaaS field?
Sure, I'm happy to start. I think, as mentioned in the intro, the kind of difference between AI and B2B SaaS is increasingly converging. I think pretty much every B2B SaaS company out there today needs to either have some kind of AI story or at least address the topic. Doesn't mean that they need to think about new ways to sell to customers in an AI-enabled way, but things where at least the use cases now are being proven. For example, improving productivity on the cost side, the advancements that we're seeing in automating coding or product releases on the R&D. It's kind of something where, at least from an investor point of view, is expecting companies to show.
Yeah, I'd say we've seen. I think within AI, you have the kind of picks and shovels and the people building the infrastructure. And then I actually think possibly more interesting is the people building on top of it, and that usually is the applications, and that at least half of them that we see tend to be AI SaaS business models. So that naturally means there's a lot of stuff coming through. I think in the portfolio, we've seen a lot of cases where actually portfolio companies of ours have good technical talent. They've got usually an okay business running already, and then a lot of the time they can build out an additional AI element to what they do. And what's been particularly striking, I think, is that usually customers sort of want, when mobile came out, they needed a mobile strategy. When 5G came out, they needed a 5G strategy. But they weren't demanding it from day one of like, we need this baked in. Whereas for a lot of our portfolio companies, customers are coming to them and saying, we need this today, which is unlike anything we've seen before. Yeah, and so the portfolio are definitely all hammering on it in some way or another. Usually that's kind of incremental or improvements to the product, but in some cases it's actually maybe this changes the business quite fundamentally from being this to something else.
Have you seen dramatic pivots?
I wouldn't say dramatic pivots, but I think it's really shown us who can ship product at velocity and who can't. So it's really notable in some of the B2B businesses that we have at the later stage, where they've really been able to kind of enact much stronger NDR numbers as a result of some of the AI-enabled products that they're shipping. So to give an example, someone like Restaurant365, so much later stage US business, kind of around 100 million in top line. They are the market-leading accounting, inventory, and really kind of analytics suite for restaurants in the US. That is a business where there's a lot of low-hanging fruit, where AI enablement is really valuable. So a good example would be something like inventory management for restaurants. That's such a simple automation task for even the most junior of ML experts, which gives immense value to all the SMB clients at Restaurant365 who wouldn't necessarily have the natural inclination to go into ChatGPT and try and code their own hack there. It's the same when we're looking at kind of some of the newer product suites, which we possibly would have thought would be kind of have a longer lead time. So an example would be, how do you enable drive-through restaurants to have integrations with kind of conversational AI providers? There's obviously a huge blue-collar workforce shortage in the US. If you can actually support those drive-throughs to use conversational AI, and that can be a really fantastic addition to the product set, you can improve NDR, you can improve actually just kind of the broader ICP as a result. So it's been really noticeable to see which of the CPOs are kind of actively saying to teams, this is the priority, this is where we can see real top-line growth, and really delivering.
Let me pick on this and also go into the trends a little bit and what trends you see within the specific fields, verticals that are growing under that as well. So I've seen some things like, I don't know, data as a service that is getting crazy growth, and we saw, I don't know, like video and interaction with customers in real time, some legal things. So any specific trends that you see as well within your portfolios, or maybe you see peaking?
I'd say one thing that we are starting to see a lot of on the B2B side is the increased number of opportunities on the vertical SaaS front. I think it's driven by probably a few factors, but one of them is there's a lot of sectors who were historically quite slow on adopting technology, especially semi-regulated industries like energy, for example. We're seeing a very compelling kind of why now and readiness to adopt vertical SaaS tools. Could also be that horizontal SaaS is quite saturated, and whilst we're also seeing innovation there, I would say the vertical SaaS is a big theme of us internally.
Yeah, I think it's quite strange that we're invested in a business called Cladara, which is a SaaS spend management platform. So they have very good data on who's spending what on what SaaS platforms, and they're throughout the whole of sort of 2022 and 2023, when everyone else was sort of seeing quite high levels of churn and seeing quite a lot of difficulty, actually on the whole across the entire market, including a lot of players like Oracle SaaS and Oracle SAP, the sort of old laggard people that actually make up quite a large portion of the industry, actually not that many were shrinking, or on the whole, SaaS was still growing. That's from that data set. I think it's pretty representative. It covers a sort of reasonable proportion of all SaaS spend in the geographies it covers. I think why there's growth which has picked up from that recently, we're starting to see budgets being a little bit more loose, or maybe not loose, but a bit more favorable and happy to spend money, where 2 years ago that was not the case. We're seeing some stuff in AI where people are sort of throwing money at it. And then I think we're seeing more and more around usage-based pricing and usage-based models often combined with a kind of SaaS model, which, I think is probably leading to quite a lot of that growth.
But are you saying that people will not get tired of paying? Because there's also a bunch of services that are making money of helping companies to actually unsubscribe of all the services that they're using on the daily basis and never use. So how's that going? And Lily, back to the previous question, or on this one, basically the idea of the challenges of subscription, how many things you're using yourself as well?
Yeah, I mean, maybe to the point about how our roles have changed, because obviously we're constantly evaluating new businesses. Like that is our constant. What has definitely changed is how investment professionals are leveraging AI. So I think at the earlier stage, most people are aware there's a lot of data scraping. So people are always evaluating, kind of web traffic. They're always evaluating headcount growth. They're always evaluating kind of GitHub stars, all those things. That is now permeating through at the growth stage as well. So I think you're seeing a lot of investment professionals who previously kind of almost their raison d'etre was just talking about what's the MOIC here, what kind of IRR can I see. These investment professionals are increasingly aware that they also need to leverage AI. So I think someone like Catterton, who has a big history as a US private equity fund, we are absolutely obsessed with AI Copilot. And I think there's a real recognition that there's low-hanging fruit in how we're managing our portfolio and making sure, be it that we're kind of all over working capital and seeing who is kind of a laggard on working capital versus some of the other portfolio companies. There's a real change in how we're evaluating the portfolio, which hopefully makes us better investors. That's really the goal there.
And what is the real change? Martin?
Yeah, I mean, the real change, I would say, the nice thing about B2B SaaS is that, some of the underlying growth drivers are, going to be strong, positive, secular drivers for a long period to come. It's funny when you look at measures, for example, such as how many of the world's workloads have migrated to cloud from on-prem, it's kind of surprising to still see how early we're still in that journey. Can't remember the latest statistics I saw. I think it was something like 30% of all workloads are now on cloud and 70% still on-prem. And I can't remember when we last discussed internally, actually, the on-prem investments. I think we're sometimes surprised how long time some of these trends take to materialize and how slow some of the big enterprises move. But actually, to your point, Alexandra, the kind of subscription fatigue is also something that we're seeing when we talk to big enterprise customers. I mean, a big problem for them is just the application sprawl. There are just so many SaaS applications out there now, and it's a big focus to try and think of how can they consolidate the stack, how can they minimize the silo data sprawl, and that is also playing a little bit against that long-running trend. So overall, bullish still for the foreseeable future, but it's also challenges.
Challenges question. So we all can be very happy with the growth that the industry is showing, but it's not forever, I guess. Or maybe it is forever, but it's not only beautiful. So challenges. What do you see as something to work on within the industry?
I think one of the it would be somewhat tone deaf not to acknowledge the difficulties in fundraising in the last couple of years for most companies. We've definitely seen a kind of dissonance between anyone raising in AI or a slightly sexy area still popping off at crazy valuations. And then actually for the vast majority of the market and a lot of B2B software platforms and companies, it's very difficult to raise. And actually I think if you got a room of 100 founders together in 2021 and asked them what are the potential problems of raising too much money or raising at too high a valuation, maybe 3 or 4 of them could quite accurately describe what the issues are. Today, I think it's about 60%, or it's a lot more of them, which is healthy for the industry, but very difficult for those that raised a little bit too much back then. I think going out to market with reasonable expectations, we still see it quite a lot where people come to us and they say, we're raising 10 million. We sort of, okay, that's good, maybe not for us. And then they come back a couple of weeks later and they say, we're raising 4 million. So that's definitely a challenge on the one side.
And are you seeing any change in that lately? Because I think last year was pretty slow, I would say, on the fundraise front of opportunities that we saw at our stage, which is a bit later stage on the B2B to SaaS. But I would say this year so far has been quite a big step change.
This year's the first year where I've started, you chat to a company, you learn more about it, and then they say a number at the end of how much they're raising, and you think, I'd say that's a good amount to raise. You don't need more than that, and you're going to be able to raise it. We still see some that kind of haven't really adapted to the new market. But yeah, it's definitely changed for the better this year, I think, which is good. It means people have to do more with less, which actually comes on to the second challenge, I think, of sales cycles are still very long. I think everyone saw them get longer in 2021, but now they've sort of stayed long, but a little bit more progress. I hope that's the case for everyone else and not just us, yeah.
Yeah, I think I obviously sit probably the closest to the public markets. And I think I'd be remiss if I didn't mention the fact that last week was a bit of a SaaS apocalypse. You had Salesforce had their first quarterly revenue miss in 18 years. I think the stock dropped 20% in one day. You had UiPath down 32% on the day. Admittedly, there were a few idiosyncrasies there, but I think in general, if you look at Q1 reporting, it's around 70% of Q1 software businesses who reported have guided Q2 lower. And I think this really speaks to the broader question for us of, we're able to value these kind of businesses on a revenue multiple because the whole premise is that there's growth and that there should be really high profits. If that doesn't come through, public markets investors do turn around and say to you, we're using free cash flow and you guys don't have free cash flow. So I think broadly there's a little bit, as to your earlier point, Theo, there is some dissonance in the market, which I think does make us a little bit anxious. And it's one of those things where obviously we're still early in the journey. That all of these businesses, when you read through the earnings reports, when you listen to the analyst questions, they're all saying, we need a little bit longer to prove out really Gen AI integration. So someone like UiPath saying how they still think actually value will accrue with them in the stack. I think the analogy they use is that they are the body and Gen AI is the brain. So we're still very hopeful that you'll actually see margin expansion will return, you'll see growth return, but I think we're still very much in the eye of the storm. We don't feel that we've left that yet.
Yeah, I mean, we've definitely seen quite a material pickup at the Series A, B, and also C stage in Europe this year. Not just companies out there fundraising, but also the competition for the best opportunities. It's just been a very competitive start to the year. I wonder if some of that is related to hopes of the exit markets being a little bit more prolific, and if not end of this year, at least next year, with hopefully the IPO window properly reopening and the exits coming in.
What if we all do that and then we pray with the whole conference?
That's how it works.
We can leave a minute at the end for a little
yes.
little prayer.
But Lily, if I may also, you mentioned, so basically, based on what you're saying as well, you see this on the pre-IPO stage, and then you mentioned earlier that there's a lot of things that impact that also influenced your decision-making process as well. So is it possible to combine these two things together right now? So like the things that you see on the market on the pre-IPO as challenges, and hoping that will change, versus your decision-making process. Is there anything, if that is like that today, then we will not go there and we will not invest there?
Yeah, it's a good question. I think, so for us, it's one of those things where it really alarms me how little private markets investors talk about the Fed funds rate. That's kind of if there's a hill to die on, that's the hill I will die on. So you look at the year and you started with the 10-year at like 3.9%. We're now, I think, roughly at 4.6%. That is incredibly detrimental towards software valuations. So I think as later stage investors, the balance we're taking there when we're then looking at kind of investment opportunities is really having to be much more conscious on the exit window. So it's that thing of, you have to have real confidence that, one, will this be a regional IPO, or do you actually think this could be a US IPO? And you need to have real conviction in actually, what is the acquisition universe? And I think previously, if you were to speak to later stage investors, the real consensus was the IPO market, kind of to what Martin was saying, would be to reopen this year. Obviously, we're still hopeful, but I think probably on balance, when we're thinking about kind of the histogram of returns and what we think the distribution of probability is, we are putting a little bit more weight on actually really concretely assessing, could there be a really interesting M&A acquisition here? Who do we think the buyer universe is? Putting a bit more weight on the private comps, because you cannot, with good conscience, have a real conviction that this could be an outsized European IPO at this point in the cycle.
Yeah. I was just going to say, coming back to the point around challenges, and it'd be interesting to hear your point of view. Something that we started debating a lot internally is, what in light of all of the advancements that's now happening on the AI side, and how easy it is to becoming to actually develop a new company. This talks about and bets going around. When are we going to see the first one-person unicorn, for example? Like, how defensible is B2B SaaS really in the wake of this? I think, 5 years ago we would often assume that a good scale-up startup would have, call it a year, maybe 2 years of time before someone would come in and replicate what they've done, and before incumbents could get their act together. Nowadays, it feels like that's down to months, and we're seeing some categories which are hyped and becoming popular, just flushed with competitors very suddenly, and makes it just very difficult for any company to extract a lot of value. So I'd say on the challenges front, that's really top of mind for us now that we're making new investments.
Which is partly our fault. I feel like there was a stage where there were maybe 30 different accounts payable automation products.
Yeah.
That's more fintech than actually some SaaS. Yeah, but now I think people are a little bit more skeptical of throwing money after, well, there's a pretty good company that started 12 years ago. Let's not try and dethrone it yet. Let's maybe go for something a little bit more incremental or a bit more disruptive, rather than just kind of copying and lowering the price a bit, or copying and adding a few different features and integrations. But yeah.
We have just a few minutes left to get back to a little bit like of strategy and the vision of the future. So the world is evolving, the industries are evolving. Is there anything that within your firms, within your companies, and maybe you yourself are doing to make things differently? Is there anything that you would like to see as a change in 3-5 years' time?
Yeah, happy to jump on that. So at Nauta, we were big proponents of capital efficiency before it was cool. Back in 5-10 years ago. It's very refreshing to us to hear other people talking about that as well, because there was a long stage where when we said capital efficiency, genuinely people didn't understand what that meant, which thankfully that's changed. I think we are starting to see more, I'd say, responsible company building, of kind of testing, treating a startup almost like a series of scientific experiments. First, can we build it? Second, does it work? Third, do customers want to buy it? Fourth, how much will they pay for it? Fifth, can we scale it? A lot of what we saw previously was people just doing all of that at once and trying to plow money in at the assumption that it did work. We're seeing less of that, and I think with that we'll see better companies. I also think we've slightly, a lot of the big winners have come from quite disruptive business models or fundamental changes in the way that customers are served. I think that initially in SaaS that was quite revolutionary, whereas now SaaS sort of often it's like, oh yeah, let's just make that a subscription spend. I don't think it's difficult, or I think there are still a lot of opportunities to have disruptive business models that sit within SaaS. So maybe charging on different metrics, how the competitors or the incumbents charge, or thinking a bit differently about it. So those are a couple of areas I'd like to see more of.
Martin or Lily?
Yeah, I do, and I think on my mind, just thinking what we'd like to change, I would love to see, from a regulatory point of view, Europe becoming a little bit more competitive. You look at the US and see how successful they've been. Look at jealousy on anything from GDP growth to productivity to other factors, and I feel like Europe has a really good shot at regaining some of that competitiveness, getting their act together. I'm hoping that with the new wave of innovation in AI as well, that politicians don't strangle that and regulate things away. So I feel like there's more positive voices now coming out of UK, France, Germany, and so I'm quite excited and hopeful to see if Europe can really regain some of that competitiveness over the next 3 to 5 years.
I think US antitrust are helping with that. We're getting a boost. Yeah, I think just probably closing thoughts for me. I'm hopeful the pain of the last 2 years means that people do start focusing on the right KPIs. So I am so sick of people just telling me headline year-on-year revenue growth. It doesn't matter. It's how does that flow through the P&L? To Theo's point, we're so much more interested in are there sound unit economics here? That's what's interesting. I'm hoping the market is slowly starting to turn and realize that's what matters.
That's what matters. And then we just all pray that the IPO markets will go back. On this positive note, I think that's our last 15 seconds, and thank you so much
Thank
for
you, Alex.
running
Thank
this
you.
panel.
Thank you
for
everyone for
having us.
listening.
Okay.